What if I told you that just 15 minutes a month could skyrocket your investment portfolio by 10 times? Sounds too good to be true, right? Well, I discovered a simple, focused routine that transformed the way I manage my money. No complicated strategies, no endless hours of research. In this video, I'm breaking down the exact 15-minute monthly routine that helped me grow my portfolio exponentially. Whether you're a beginner or a seasoned investor, this quick habit could change your financial future. Let's dive in. Today we will talk about this 15-minute monthly routine grew my portfolio 10x. So before we start, make sure to hit the like button and subscribe to my channel. 1. Introduction to a simple yet powerful habit. When it comes to investing, many people believe that only those who spend hours analyzing the market or trading daily can succeed. However, my experience has shown me otherwise. A straightforward 15-minute monthly routine completely transformed my portfolio, multiplying its value by 10 times over several years. This approach combines discipline, simplicity, and strategic adjustments, proving that consistent small efforts can lead to massive results. If you're intimidated by the thought of constant market monitoring or complex financial analysis, this routine is designed just for you. It's perfect for busy individuals who want to grow wealth steadily without dedicating excessive time. I'll share every detail of my monthly routine, explain why it works, and how you can implement it step by step to potentially achieve similar success. 2. Why a monthly routine? The power of consistency. One of the biggest lessons I learned early on was that consistency beats intensity. Instead of checking my investments daily, which leads to emotional reactions and impulsive decisions, I committed to a 15-minute monthly review. This allowed me to stay calm and focused, avoiding the noise and volatility of daily market fluctuations. Monthly check-ins create a rhythm that helps maintain oversight without becoming overwhelming. It's long enough to notice significant changes, but short enough to prevent micromanaging. This approach also aligns with the natural reporting cycles of companies and the release of economic data. Over time, this consistency nurtured a disciplined mindset, a crucial factor that contributed to the substantial growth of my portfolio. 3. Setting clear financial goals. Before embarking on this routine, I had to clearly define my financial objectives. What does growing my portfolio really mean? For me, it was about increasing net worth with a balanced risk approach that allowed for both capital preservation and growth. Setting specific, measurable goals helped keep my routine focused. I aimed to outperform typical market returns by a significant margin, with an acceptable level of risk that suited my age and financial situation. Without clear goals, it's easy to lose direction and fall into chasing trends or trying risky investments. Every 15-minute session began with a quick reflection on my goals, ensuring all decisions aligned with my long-term vision, making each action intentional and impactful. 4. Reviewing portfolio allocation and performance. The first critical task during my 15-minute routine is reviewing the portfolio allocation. Diversification is key to reducing risk and enhancing returns. I regularly check if my asset mix, stocks, bonds, ETFs, and cash, is still aligned with my risk tolerance and market conditions. I also track performance metrics to identify underperforming assets. This step involves using simple online tools and portfolio trackers that show gains, losses, and overall growth percentages. Importantly, I don't obsess over short-term losses, but focus on trends over months or years. Adjusting allocations when necessary helps maintain balance and seize growth opportunities, contributing significantly to the overall portfolio increase. 5. Conducting a quick market and news scan. While I avoid daily news to reduce noise, I dedicate a small portion of my routine to scanning important market updates and news affecting my investments. This includes earnings reports, dividend announcements, geopolitical events, and economic indicators like interest rate changes or inflation data. I rely on reputable financial websites and newsletters for concise summaries. This step is vital to anticipate potential impacts on my portfolio and to identify any immediate risks or opportunities. Staying informed enables proactive adjustments rather than reactive panic selling or buying. This habit built a stronger connection between my portfolio's performance and the broader economic landscape, empowering smarter decisions with minimal time invested. 6. Making strategic adjustments and rebalancing. After reviewing the portfolio and scanning relevant news, I use the remaining time to make small strategic adjustments. This might include rebalancing, selling assets that have grown disproportionately and buying underweighted ones to maintain target allocation. Sometimes I add new investments aligned with emerging trends or reduce holdings in sectors that seem overvalued or vulnerable. Importantly, these changes are never impulsive. They're grounded in data and aligned with my financial goals. This careful monthly fine-tuning, rather than chasing quick wins, has helped compound gains exponentially. 7. Automating where possible. One of the smartest moves I made was automating routine tasks like contributions and dividend reinvestments. This automation minimizes the chance of skipping investment months and harnesses the power of dollar-cost averaging. Every month, I set up automatic transfers to my investment accounts and enable dividend reinvestment plans, DRIPs, for stocks and ETFs. This means my money keeps working without manual intervention. During my 15-minute routine, I review these automated transactions to ensure everything is running smoothly and to adjust amounts if necessary. 8. Tracking progress and learning from mistakes. Keeping a detailed journal of each monthly session was a game changer. I know decisions made, reasons behind them, and outcomes over time. This reflection helps identify patterns of success in areas needing improvement. Tracking progress against goals keeps motivation high and ensures accountability. When mistakes occur, such as holding onto a losing investment too long, reviewing journal entries allows me to analyze what went wrong and adjust my strategy. This feedback loop fosters continuous improvement. Over several years, this habit of documentation and self-review enhanced my financial knowledge and decision-making skills, contributing significantly to the tenfold growth of my portfolio. 9. Your turn to start the 15-minute habit. If you're ready to grow your portfolio significantly without dedicating hours daily, this 15-minute monthly routine is an ideal starting point. It requires discipline, a clear plan, and consistency, but no advanced financial expertise. By setting goals, reviewing performance, scanning key news, making strategic adjustments, automating contributions, and tracking your progress, you can steadily multiply your investments over time. 10. The psychological benefits of a structured routine. Beyond the tangible financial gains, this 15-minute monthly routine brought significant psychological benefits. Investing can often trigger anxiety, especially when markets fluctuate wildly. By committing to a brief, scheduled review, I reduced stress and avoided the temptation to obsessively check prices or react emotionally to short-term swings. This structure created the sense of control and confidence, reinforcing positive habits rather than fear-driven decisions. Knowing I had a dedicated time to evaluate and act helped me stay disciplined and patient, two qualities essential for long-term success. The routine also fostered a growth mindset, turning investing from a source of worry into an empowering activity. Ultimately, the mental clarity gained was just as valuable as the portfolio growth itself. If you like this video and would like to see more like it, please give it the thumbs up. Leave a comment and click the button to subscribe.